Hello, in this lecture we're going to work some more shorter problems that could be used for multiple choice type problems, and I'm going to pull this over to this side once again and take a look at a trial balance. The trial balance being unrelated to the problems but is a good cheat sheet to have. I recommend having a trial balance open at least for practicing, and if it's available during a test, have it open during a test. Alright, the following transactions occurred during July. Alright, received, so I'm going to skip the transactions now. I'm going to go down to what is required, what they're asking for, what was the amount of revenue for July. So that's what we're looking for. Now let's go back to these questions in the context of looking for revenue type transactions. Now anytime we see one type of area, we might want to make a T account. So I'm going to make a T account for revenue, and we're going to have debits and credits. So we have debit, credit. And then let's clean this up just to make it look nice. I'm going to center this. I'm going to underline this. We don't have to do this, of course, but this could make it a little bit easier to read. And even if we're doing it for ourselves, it could be a little bit easier to work with. And then we'll put a line on this side just to complete the T. So we want to complete the T by having the left border like that. All right. So then the following transactions occur. Now note that revenue really only goes up for the most part. So note that most of these transactions, if it's going to affect revenue, it's going to be on the credit side here. So we could just kind of count it up in that way without even having a T account. Just look at the things that are going to increase revenue. Not too often will revenue be going down. All right, so received 1,006 cash for services provided to a customer during July. So the first thing I would usually think of is cash affected. In this case, yeah, we got cash, so we received cash. We're going to debit cash. And then what's the credit going to go to? And in this case, the question is, did we provide the services? Remember, we're talking about the revenue recognition principle here. And it says for services provided to a customer during July. That's the month that we are in. Therefore, we did provide the work, and therefore we can recognize the revenue under the revenue recognition principle at this time period. So the credit will go to revenue. So revenue has a credit balance. We're going to make it go up by doing the same thing to it, which in this case will be another credit. Credit 1060. And then next one says, I'm going to go ahead and highlight this as well. We're going to highlight this as we go and make sure that we're done with that. We're on the second one. So received 5,200 cash investment for the owner from the owner of the business. So what's the journal entry? Cash is going to be debited. Cash is a debit balance. It's going to go up, and therefore we're going to do the same thing to it, which is a debit to cash. What's the credits going to be? Well, is it going to be revenue? I guess is the question here, because that's what we're looking at. And nah, it's not going to be revenue. We got it from the owner. It's going to be a credit to the owner. The owner put the money in there. No effect on revenue. Therefore, that's not going to be included in our T account. 3 says received $950 from customer in partial payment of his receivable. All right, so is cash affected? And we're going to say, yeah, we got received cash, so we're going to debit cash. What are we going to credit? Well, again, did we do the work today, or did we do? I mean, it's from a customer, so it's probably we earned it at some point. However, in this case, we earned it in the past. We received money for work that was done in the past. Therefore, that money is in the receivable. We already recorded the revenue. And it's in the receivable. We're going to decrease the receivable. So cash is going to go up with a debit. Receivables are going to go down with a credit. No effect on our income. The income was affected when we did the work sometime in the past, it looks like, in this case. 4, provided services to customer on credit. Okay, so we're going to say, is cash affected on that one? And it says on credit, so that means that generally, no, we didn't get cash. We got something else. Notice that this on credit, oftentimes we'll say on credit, often say on account. And those two words basically mean that usually accounts receivable or accounts payable is affected. In this case, it's accounts receivable because we are the ones doing the work and we didn't get money yet. Therefore, we got kind of an IOU. It's still an asset, not as good as cash, I know, but it's still an asset up there, and it's going to go up in a similar way as cash. It's going to go up. We have more people owing us money. Therefore, we're going to debit the receivable, increase in the receivable. What are we going to credit? Well, we still earned it. We still earned it under the revenue recognition principle. Therefore, we can recognize revenue and credit revenue, increasing revenue, even though we have not yet received the money for the work that we have done. So we're going to credit the 535 in our T account. And I'm going to highlight that. Then we borrowed $7,600 from the bank by signing a promissory note. So is cash affected? Yeah, cash is going up. We got more money. Cash is a debit. We're going to make it go up by doing the same thing, which would be another debit. What would the credits go to? Well, I guess, is it going to go to revenue? Nah, we didn't earn anything. We got a loan here. They just got a loan. So it's going to go to a liability. Why? Because we owe it in the future. Liability of a credit balance is going to go up with another credit. All right, so I'm going to go ahead and highlight that. That's not that. That's not going to be in our TN account. Received 1,410 cash from customers for services to be rendered next year. All right, so once again, is cash affected? Yeah, cash is affected. Cash is a debit balance, so we got more of it. We received it. It's going up. We're going to debit cash. What's the credit going to go to? Is it going to go to revenue? Well, we're going to earn it. It came from the customer. However, did we earn it yet? Did we earn it at this time period? Nah, we're going to do the work next year. So even though we got the money, we don't have the revenue. And therefore, what are we going to credit? Well, we can't credit revenue. We didn't earn it. We're going to credit unearned revenue, some type of unearned revenue, a liability representing the fact that we owe the work in the future, or we got to pay them the money back. And therefore, these are the only two that we have in our T account. And if we sum those up, notice they're both credits. It's always going to be a credit in a type of problem like this because revenue is generally only goes up. And therefore, we come out to the 1595. Next one says a company opened a frame shop and completed these transactions. I'm going to skip through this. I'm going to go to the end of it now and say that what are we looking for? What do we want to find out? We want to find out what was the balance in the cash account after these transactions were posted. That's what we're looking for. All right, so let's go through that and that's it. Okay, a cash account. Let's make a T account for the cash account because that's the one we're going to look at. We're going to have cash and it's going to be a debit on the left, credit on the right. We'll go ahead and center this, make it look fancy and nice, presentable here. We're going to merge that. Going to go ahead and center these. Going to go put an underline here like so. And we'll put a left underline on this side like that. And we have our T. All right, we know that cash has a debit balance account because if we look at our trial balance, it doesn't have brackets here. So it's going to be debits are going to always win. So we have the owner. Started the shop by investing $40,800 cash and equipment valued at $18,800. All right, so that means that is cash affected? Yeah, cash is going to go up by $40,800. Equipment's also going to go up by $18,800, and the credit is going to be the $40,800 and the $18,800 credited to capital. But of course, all we're concerned about here is the cash. So cash is going to go up in the debit direction because cash has a debit balance. We're going to increase it with another debit. So on our T, we will have a debit. Then number 2 says purchase 150 office supplies on credit. All right. Well, is cash affected? No, we bought it on credit. So that means it's going to be the payable account. So the payable account is going to be the credit. We're going to debit supplies, the asset, credit the payable account. No effect on our cash at that time. I'm going to go ahead and highlight these two. Those two are done. Paid $2,000 cash for receptionist salary. So is cash affected? Yeah, cash is affected. We paid. Keyword being paid. Usually it means we paid with cash, and it could be a check, obviously, but that's a form of cash. We're going to say. So cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which would be a credit. We're going to credit cash. We're going to debit something like wages expense, salaries expense, something of that nature. But we are concerned with cash. So the cash is going to be a credit. I'm going to represent the credit with negative numbers. 2,000 right there. All right, I'm going to highlight that. I'm going to say we did that one. Mark that off. 4. Sold a custom frame service and collected $5,300 cash on the sale. All right, well, is cash affected? We collected a $5,300 cash, so that means that cash is affected. So cash is going to go up. Cash is debit balance. We're going to go up by doing the same thing to it, which in this case would be another debit. And we would credit, in this case, the revenue because we earned it at that point in time. But we're concerned with cash. Cash is going to be a debit on our T account here. There we have it. And then I'm going to highlight that one to be consistent here. The last one here, completed framing services and billed the client. All right, so we did work, billed the client. Is cash affected? No, we didn't get the money. We just sent out the bill. So we got a receivables affected. The receivables going up, and we get to credit cash because we get to credit revenue because we did the work. Cash is not affected. And therefore, if we add up our debits and credits, then I'm going to put a little line here to make it look nice. We're going to put a line And then we're going to have our total debits and credits. Total debits equals the sum of the 40,008 and the 53. That's going to give us the 4601. Our total credits, of course, will just be that 2,000. The 46.1 minus the 2,000 means we have an ending balance of the debits minus the credits. Debits plus the negative credit gives us the 44.1. That's what is left in cash at the end of this time period. Next one says, at the beginning of January of the current year, company ledger reflected a normal balance of $69,000 for accounts receivable. During January, the company collected $18,200 from customers on account and provided additional services to customers on account totaling $14,200. Additionally, during January, one customer paid company $6,700 for services to be provided in the future. At the end of January, the balance in the accounts receivable account so we're looking for the balance in the accounts receivable account. So one account we're looking at, what are we going to do? Probably good idea, draw a T account. So accounts receivable is our T account. We're going to have debits and then credits. And we're going to make that look nice again. I'm going to make it look nice by going up here and we're going to say that we want to merge those. And I'm going to center these like this. I'm going to center that. I'm going to draw a line under it. And then we'll complete the T with the line on this side. You know, you could do it this way too. I'm always kind of putting the line on the left. I mean, you could just to switch things up, highlight and then have the right border just if you wanted to do that. All right. At the beginning of January of the current year. So now we need to see where we're going to start and what they're looking for here. So in this case, the ending says that at the end of January, the balance in the accounts receivable is what? So we're kind of going in order this time. Instead of backing into the first number, we're actually going in the actual order that would probably happen in real life. So they're going to give us the fact that it has a normal balance. We have a beginning balance in our T account, like our GL account. It's going to be 68,000. It's going to be on the debit side. Why? Because if we look at our trial balance over here, the normal balance for assets, of which accounts receivable is a debit, represented by the fact that it does not have brackets over here. So during January, the company collected $8,200 from customers on account. So that means we got what happened there. We collected money. So we debited the cash and we credited the receivable. We collected money for work that we did in the past that's in the receivable. So that's kind of what this 69 reflects. Money that's owed to us. How much money did we got? Cash. So received cash is going to be the credit to the receivable and the debit to the cash. And so it's going to reduce the receivable with a credit. I'm going to represent that with a negative in my worksheets here. 18.2 credit the company on the account. Okay, from customers on account. Provided additional services to customers on account. And remember, whenever you hear on account in terms of a problem, it means either accounts receivable or accounts payable. Of course, in this problem, we're talking about accounts receivable. And so we did work on account, meaning we did work, we billed them, we sent out the invoice, we haven't got any money yet. So we billed the client, basically, is what happened. We did work and we kind of billed the client. And what happens when that happens? Well, is cash affected? No, not yet. We got an IOU. We, in essence, are logging down the IOU, debiting the receivable, and crediting revenue. The fact that we have, yes, earned revenue, however, we have not yet gotten paid in the form of cash. So we're going to say debit to the receivable for the 14.2. And then they kind of throw a curve in here on this one. This one's a tricky one. They're going to say, additionally, during January, one customer paid company $6,700 for services to be provided in the future. All right, well, is cash affected? Cash is affected in that case. We got paid, so we're going to debit cash. And we're going to credit what? Well, did we do the work? No, if we did, we'd credit revenue. Since we didn't do the work, we got to credit unearned revenue. So it's kind of funny that there's a timing issue here, but it's not the timing issue that usually goes in the normal way, which means we send out the bill and then get paid. This is kind of the opposite. We got paid like kind of a deposit before we did the work. So it's not going to go into receivable. It's going to go into a liability here, meaning that we have to do the work in the future. And note that in a multiple choice question, of course, if you just kind of add up all the numbers, that the answer including this number will probably be one of four choices, right? So don't think that just because you get the calculation right, that and you find that calculation one of 4 multiple choice questions, that it is right. It's obviously every multiple choice answer is going to be some combination of the numbers given. So you got to kind of be careful there. So if we add up, so we're going to total these up, and we're going to say, okay, well, let's put a line under here. These are the total debits, which add up to the sum of the 69 and the 14.2, and then the total credits add up to the sum of the 18.2, and then the debits are going to win because it's a normal debit account in our foot race here. I'm going to put an L here, even though I'm not too concerned with my spelling because this is a quick worksheet, but here we go. So now we got the debits, 83.2 plus or minus the 18.2, or plus the negatives. 83.2 minus 18.2 is the 65,000. So at the end of the day, we will have a balance in accounts receivable of 65,000.